Welcome back students to the economics of class 10. In the last class, we learned about the topic Introduction to Banking. Today we are going to learn part 2 of the same lesson. Here we are going to learn about the types of banks. Firstly, the commercial bank. Second, the central bank. And third, the cooperative bank. The commercial bank is a financial institution which performs the functions of accepting deposits from the public and lending loans and offers allied services to its account holders and also to the public at large. There are three types of commercial banks. They are public sector banks. These are also called the nationalized banks. Second, the private sector banks. And third, the foreign banks. Now let us look at the central bank. It is a national bank of our country. It is also called the apex bank and has independent authority. In India, the central bank is known as the Reserve Bank of India, what we call as RBI. We shall now look at the cooperative bank. These financial institutions are owned and run by its customers and operate on the principles of one person, one vote. It accepts deposits and grants loans to the members and non-members. Students, now we shall look at some of the functions of the RBI. The Reserve Bank of India issues the currency of the country. This is the first important function. Secondly, it regulates the commercial banks. Thirdly, it is the government's banker, wherein the government can borrow money from the RBI. And fourth function, it regulates the money supply and the interest rates. Now we shall look at banking with new technology. With the widespread use of the computer, internet, and the smart cell phones, Indian banks are now able to provide more diversified and convenient services to its customers. A few of such enabled services are as follows. Firstly, the immediate payment service, also known as IMPS. Secondly, the real-time gross settlement, that is RTGS. Third, National Electronic Fund Transfer, NEFT. Fourth, Internet Banking. Fifth, Mobile Banking. And lastly, Automated Teller Machine, popularly called ATM. Now, what is IMPS? It is an instant interbank electronic fund transfer through the internet banking system. This service is available 24/7 throughout the year. The minimum transfer value is ₹1 and the maximum is ₹2 lakhs. The bank charges a fee for the transfer. Each transaction is settled independently, hence all the details of the receiver must be furnished to the bank. Second, the real-time gross settlement, RTGS. It is a system through which electronic instructions can be given to transfer funds from one bank to another. The funds transfer between banks takes place on a real-time basis. RTGS is settled on a gross basis, which means each transaction is settled independently, and the minimum amount to be transferred is 2 lakhs. It is mainly for companies to transfer large amounts and for individuals who require urgent payments to be done. In this, the beneficiary's bank has the responsibility to credit the account within 2 hours from the time of the transaction. This is all about RTGS. Now we shall look at the NEFT, National Electronic Fund Transfer. It is a system whereby anyone who wants to make payment to another person can approach his bank and authorize to transfer funds directly from his account. NEFT operates in hourly batches and funds will be transferred. There are 12 settlement cycles during weekdays and 6 on Saturdays. The amount is credited in the beneficiary's account within 2 hours. There is no minimum or maximum limit to the transferred funds. Here you can see some difference between NEFT, RTGS and IMPS. However, I think the banks nowadays do charge an amount on RTGS. We shall look at internet banking. It is a system that allows individuals to carry out banking activities from anywhere and at any time without visiting a bank branch. But it requires internet services. And also importantly, one needs to register with the bank to carry out the online banking. The bank provides the password initially through which the customer can access the web page of the bank. Later, the customer must create an username and password to carry out all the transactions. Routine transactions such as money transfers, balance inquiries, bill payments, etc. can be made using internet banking. Mobile banking. It refers to the use of a cellular phone to perform banking activities. The activities are similar to those carried out through online banking or the internet banking. The bank can send intimation to their customers via SMS, OTPs, etc., which enables to protect the customer's information while transacting to the customer's phone, which can be accessed immediately. Here also, the customer has to register with the bank to avail the mobile banking facility. The transactions can be carried out anywhere provided there is good network. Lastly, we shall look at ATM. It refers to automated teller machine. With the debit or credit card, a person can withdraw money or check his balance in the account or access all the services provided by the machine. The customer has to create a PIN with which the debit or the credit card becomes accessible. This is needed for carrying out transaction through the machine. Students, nowadays most of the people do online shopping or pay for your services online. But you must be very careful while you are doing banking online. You must look for many of the options before being cheated. Never share your passwords. It is better to take a precaution than being robbed online. Beware of cyber crimes. Let's take a quick recap. In this video, we have learned about the types of banks, mainly the commercial bank, central bank, and the cooperative bank. We also learned the functions of the RBI, and later we've learned about banking with new technology. Students, make a list of the number of banks you know in your locality and classify based on the type of bank. Thank you.